Hello, hi everyone. Welcome to yet another episode of Intrinsic Value Analytics Dashboard and how to use it. In the last videos that we have covered personal finance, we have covered two modules from market analysis, market pulse and earning trends. Market pulse was very much full of insights. Earning trends was more of a straightforward, but it gave you a great idea on how to look at the companies, how to look at their earning and revenue trends. But now today I'm going to discuss something that is not only very much important, but in the whole market, you will not see this kind of insight, right? Now, this is the core of what we do. That is the market valuation. What I'll do is I'll just go to the market valuation tracker, right? So what intrinsic value valuation index is, let me tell you. Intrinsic value valuation index is basically a historical and present valuation of all, not only index of all these sectors and the broad market also. I will show you the broad market index also. It tells you in the present, where do we stand? So if we are overvalued, it tells you in the present. It does not wait for market to go down by 10, 20%, 30% before it tells you market was overvalued, or it does not wait for some line to cross some line before it tells you that the market is very much overvalued or overheated, right? So this is purely made based on the fundamentals, purely made based on the valuation. I will show you something and it will blow your mind. So I'll just go to the broad market index and you will see the power of this valuation index. So this is broad market index. When I've clicked here, all you have to do is you have to click here and the chart will become visible to you, right? Now, this chart is from 2006, right? So look at 2000. I'll just explain to you how to look at this broad market index or any index. This is a blue line and this is a brownish line, right? So every time the blue line is above the brownish line and the divergence is huge. So this is the divergence, right? The markets are hugely overvalued. And whenever the brown lines are above the blue lines and the divergence is huge, the market is undervalued. It's very simple, right? So as you can see here, in 2006, market was very much overvalued. And then it became nearly fair valued because it came in touch with each other. And again, it became overvalued in 2008. Definitely market was overvalued. And after that, market had corrected so big and it reduced your capital of 1 lakh to, I would say, 20,000 or 30,000. And in February 2009, again, market was very much undervalued. Why? Because the opposite was there. Same thing if you look at it, 2010, market was slightly overvalued. And then in 2011, market was slightly undervalued. Again, 2013 market was undervalued. 2017 market was overvalued. 2020 market became undervalued. 2022 market was slightly overvalued, not slightly, good enough overvalued. Market was very much overvalued in August 2024. So it gives you the view of market every time that market is overvalued, and it tells you how much you should be investing in the market, right? And every time you look at the market has made the peak here, market has made the peak here, market has made the peak here, market has made the peak 2022, 2024. Every time market has corrected by a lot, right? And every time market has made an attempt to become fair valued or become undervalued, the market has made a reversal from there and market has given great returns, right? Every time. See, from 2009, market gave great returns till September 2010, right? And look at the market 2016 to 17, market gave huge returns in those 2 years. From 2022 market gave great returns. 23 to 24 market gave great returns. Right now market is definitely overvalued, but this is the place also where market showed some fair valuation in the past. And whenever the market makes these kind of bottoms, you can put some money in the equity. That is also the part. So this is the highly accurate valuation index. Now you can use it with whatever you use otherwise, fundamentals or technicals, and take your buying and selling decisions. Why? Because it gives you the realistic view at that particular time. It does not wait for, as I said, it does not wait for RSI to turn negative, because by the time RSI will turn negative, your 20% of portfolio will be down, right? It tells you in the realistic manner whether the market is undervalued or overvalued, right? So let's look at the broad market index. I have shown you it is definitely overvalued, and the divergence is also huge. Look at it. You have to look at the divergence 17, 18, 21, 22, and 24, 25, right? If the divergence is that much, you have to be very self-aware, or you have to be cautious where whether you want to invest or not, right? If you want to ride the momentum, that's fine, but obviously, as I said, you have to stay at the door. So let's look at other indexes. This is basically index that is nothing but the Nifty 50. So if you look at Nifty 50, see 2007 very much overvalued, 2009 very much undervalued, again 2012 undervalued, 2016 undervalued, 2020 undervalued, and now again the market is undervalued 2026, right? Overvaluation 2007, December 2007 overvalued, 2010 overvalued, right? 2015 fairly valued, 2021 overvalued, and 2023 was also overvalued, right? Let's look at gold valuations. The gold valuation looks little different, but the principle is same. So instead of making two lines, we have created one line only, and one line we have said undervaluation, and one line we have said overvaluation. Every time the gold is touching the overvaluation line, we are calling it overvalued, and it has touched. See, February 2009, it was way much overvalued. Same goes for December 11, same goes for August 13, March 2020. The gold was fairly near to overvalued market, and gold again became overvalued nearly in Jan 2026. And now by the time this touches here, it becomes undervalued, right? That is gold. Similar goes for silver. As you can see, silver has touched here, here, here. Every time it was undervalued. And whenever it has touched here, 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 or here, it became undervalued. And the best thing is that we have created for all the sectors. So you can look at the energy valuation, you can look at IT valuation, you can look at mid-cap, you can look at commodities. So let's look at energy. You look at the energy and you will see that the markets are fairly valued, not that overvalued, but yeah, right. It was very much undervalued in 2020, and after that, energy stocks have done very, very well. Power stocks have done very, very well, and because at any given point of time, when the market may be very much overvalued, but some sectors can be undervalued, and that is where it will help you. Look at the IT. So when the whole market is very much overvalued, IT sector is actually undervalued. And what you have to track for, you have to track for these kind of peaks, right? December 2028, March 2016, right? June 2020, and now I would say September 25, or right now in May 2026. So these are the kind of undervaluation we have seen in 2008, 2009, sorry, 2009 or 2016 or 2020. So you do not want to miss these opportunities, because the stories will continue to come, the narrative will continue to come, the news will continue to come of AI and this and that, but you know that IT industry will always bounce back, right? Now, there is one more thing that this whole session, this whole segment will help you in tracking the ETFs. So you are not very sure, let's say, you are not very sure that TCS will work in the future or not, or Infosys business model will work or not, Tech Mahindra will work or not, Persistence will work or not, or Mindtree will do good or not, right? But you know for sure that the IT sector as a whole will always come back, right? That is the time. So you are bullish on the assets, you are bullish on the sector, but you are not bullish on individual company. And that is where it gives you the best idea. So IT sector is very much undervalued. You think IT can do well, you look at the IT ETFs. You can look at Nippon IT, or you can look at Zerodha IT, or other IT index are there. ETF indexes are there. Okay, so there are different indexes are there: oil and gas, private bank, financial services, metal, financial services, media, consumer durables, liquid 15, service sector. There are Sharia 25, Sharia 50, and then there are MNC, PSC, commodities, and then there are broad market indexes, which can help you in individual stocks. So individual stocks, if you look at it, that's definitely overvalued. So I've already mentioned this, but I'll again mention it. We have made this whole tool. This is all made in Bharat. So you can share it with other people also. They can also make some use of it. They can also analyze the companies based on this. And if you have already not access of this, I will send you the link, and I will you can go and check out all these valuation trackers, earning trends, market pulse. In the next video, what we are going to learn about, we are going to learn upcycle and downcycle indicator. I have already explained to you in our workshop how does it work, but I'll give you anyway the idea how upcycle and downcycle indicator works, how you can find out the sectors that are in upcycle, how you can find out the sectors that are in the downcycle, what to do for the companies that are in upcycle and downcycle, or the sectors that are in upcycle and downcycle. And then we will go to the portfolio tools, where we will review the particular stocks, how to review the particular stocks, what can be the parameters, what can be the indicators, and how does portfolio review tool will help you give the insight on those stocks. As I've told you, there are a lot of tools available which gives you the data on the stocks, which gives you there are two types of tools are available. One type of tool is which gives you data, and the other types of tool is available which gives you insights based on price or volume or some RSI, MACD, and all those things. But I have not seen even a single tool that gives you insight based on the fundamentals, right? Fundamentals or management or triggers that we have derived. So this is where this tool makes your life very easy, and you can get the access of it. I will send you the link in the description, and yeah, keep sharing with your friends. This is all made in Bharat. Our own team have created this so that your investing journey can be very uh, easy. And so I will see you in the next video. I will see you in the next chapter, where we will talk about the market cycle or upcycle and downcycle indicator, which is one of the most important thing, because we look at three things: quality, valuation, and cycles. And one of those three things are here. So there are three secrets of creating great multi-baggers, and that is, we are going to talk about that, and we are going to talk about the first secret in the next video. Okay, thank you. Thanks a lot.